Hello traders, welcome to another update for the midweek from tradethebear.com. This was a pretty good week for us. We saw the market make a move up and we were positioned very well for this particular move. The market has been moving sideways, and just this week, early in the week, things really started taking off. So we'll take a little bit of time and we'll look at this today and see what we can do to continue to capitalize on this move and maybe even find out where it's going to stall and possibly pull back. So take a minute with me and let's look at the charts together and see what we can learn about what's happening in the market and where the market is going to go. So you can see here with the chart that I have up here right now is the ES, but I want to start with the VIX, which we talk about considerably. So the VIX is going to give us a measurement of volatility in the market, and you can see here when everything was going really crazy back in mid-March, the VIX was flying high at 85.47, which was one of the highest times in the market. Probably what, 2008? Somebody pointed out to me in 2008 that the markets had done the same thing, which we could go back and look at, but there's no reason to do that at this point. Just to understand, the volatility is going to make options more expensive, premiums higher. So as we're collecting premium in the market, we stand to make a little bit more money. So it just helps us to understand how to trade options by understanding the VIX. And as you can see, the VIX is starting to get down in here to the territory where in normal conditions 30 would be really high. So I usually have an alert here at the 30 to kind of tell me to do some things with the particular positions that I have on. So anyway, hopefully this will continue to trickle down a little bit. Don't worry about the moving averages and so forth on that right now. So now let's move over and let's take a look at the VIX. Let's look at the general market, the S&P 500. I like to look at the futures. You can see here that we've retraced quite a bit of this move. So let's take a look at a fib and see what it can tell us. So we go here, see this 61.8. We tagged the 61.8 today, and this was the total of the move from here to here, 0 to 100%, and then 61.8% of that move is what we're dealing with right now. I anticipate that we're going to come up here and deal with this line here, this red line. So that's looking at it on the weekly chart. Now let's move over here to the daily chart and just playing around here. So let's see if I do this right. Here to here. No, that's not what I want to do. I want to go like this. I want to go from here to here and then come down to here. Okay, so we've gone 50% of the move of this move here and the pullback. So you can see our low here. This is our kind of our swing high, swing low, swing high, swing low. So if you hear people talk about swing highs and swing lows, that's a good way to tell. You can just look where the turns happen in the market and it gives you a good indication of that. But we look at the weekly chart. This is pretty bullish to me. And of course, looking at the daily chart, we're seeing some very nice bullish signs as well. So, look at this 61.8, look at this red line that we have here, and I anticipate that we'll possibly head in that direction. If you go back and look at if you look at the video I made on the weekend, you'll see that I talked about this move a little bit, and the market kind of played out that way. So, so it's kind of nice to get it right once in a while and to make a little money. So, so that gives us the S&P 500. You can see these moving averages are here. You can see that we have some resistance here. So there's going to be a little congestion right in here that it's going to deal with. This is a level that we came off of before when we made this initial move down. This is where it stalled, found its way back up, and then pulled back. So this level right here, it was taken out today pretty well. You can see how it kind of tried to get there and then came back. And of course, this could be a walk the Keltner as we go up. So, so you can see I'm pretty bullish. We ask ourselves, where's the bear? The bear is taking a little bit of a nap right now. So watch this week as things progress. And then let's look at the NQ. It's going to look pretty much the same. Well, once it loads. So yeah, pretty much the same. Good little, this level right here is pretty important, and you can see we blew out of that. The volume was fairly good, not the greatest, but fairly good coming out today. So again, this one now has progressed. I think we're at the 78.6, are we? Yes, we're right at the 78.6. Look how these levels work. That's pretty amazing. Pretty attractive. I mean, think about that. It's like a magnet pulling itself to that part of the market. So on this one, we might see this start to stall a little bit right in here, and we'll just have to see. But think about that. As bad as things got here, we've already retraced 78% of that. So markets are fun, to say the least. And now let's see. Let's look at the ZB. I have some friends that trade the ZB quite often. I chat with them on a regular basis. And you can see here that we have, this resistance here. We have the support here. We're just forming a nice little channel. Probably be something you could do a spread under here if you wanted to, and expect that to go up. Not a strategy that I really like, but there are oftentimes people will do that. So if I was going to do anything with this, I wouldn't right now. Look at this candle right here, this weekly candle, and how much range there is. And if this is kind of keeping everything in check and causing things to kind of stay in this level. Now let's go look at gold. Now let's look at oil first. Oil's been in the news a lot. There's a lot of action going on with oil right now. So the folks in Texas are struggling a little bit. Russia's struggling a little bit. And look at this. We're down at $16.33. About the only thing that's good for is low gas prices. As far as markets go, we're going to need, the only good thing this is that it's going sideways a little bit. We have all heard the news about the reserves and how much oil is off the shore and, things of that nature. So I don't anticipate this making any big, strong moves at any given point in time. So the next thing I want to look at is gold. I had a friend ask me about gold today. So let's talk about gold a little bit. Actually, he was asking me about the miners, and we did talk about that a little bit. I think that's GDX, right? If I remember right. Whoops. Let me go to GDX first. Oh, so this one, yeah, you can see we drew a line here. Nice little trend up. Looks like the GDX is doing just fine. Got a nice little move on the weekly chart. We got a little breakout from this level here. Pretty strong breakout too. Let's see, how's that volume? Well, the volume's not the greatest on the weekly, but again, it's making a move and it's making it very, very well. Just kind of trickling up. So is gold doing the same thing? Not really. Gold is in a channel sideways right now, so we'll have to see how it deals with this area. And of course, we've drawn these lines. I think I drew these lines this weekend, so we'll see how that turns out. So gold, if I was going to be anything, I would be bullish with the expectation that this is going to continue to go sideways, and I would look for a break in either direction. The last thing I want to look at is the dollar. The US dollar. So, wow, I don't know why my charts are taking so long to load. I don't know what's going on with that. I'm going to have to check my internet connection and see if it's moving. The dollar kind of looks like bonds a little bit like gold, kind of channeling sideways. Maybe that's healthy, trading around the 99.95. It's amazing that the dollar is doing as well as it is with everything that's happening and how much money is being created by the Fed right now. So the last thing we want to do is we want to go in and look at our various positions and or our potential for positions. I think you see, if you go back and look at my last video, I had a long call on this, or I still have a long call on this. Actually, I'll be rolling that tomorrow to gather a little more time. so that I can see how it, just continue to make the opportunity for this. You can see I have a stop, kind of a mental stop in here. That needs to be moved up right now, so I'll do that when I can spend a little more time with it. But KRE, we're definitely long. We're dealt with the 50-period moving average. These are regional banks. I'm not sure why they're doing so well with the money being as cheap as it is. It makes it difficult for them to make money when it's like that. So somebody smarter than me knows what's going on. It's obviously going in the right direction for our trade. The Qs, which we already looked at with the NQ, basically the same. Home builders made a really good move for us, and broke out of this area here. This is going to become, actually I'm just going to remove it. Doesn't really matter to me at this point. You can see we had a nice little trend kind of developing here. This right here was a little bit hard to take for the last week or so, but the rewards came out now as we're starting to break out, or as we have broken out of this. Now you can see this gap over here pretty much has been filled. So there's still a gap up here to fill. So we'll look for that gap to fill, and we just keep riding it up, The XLE, I do not understand why these charts are taking so long to load. Okay, XLE, making a pretty good move. Down here, again, our charts told us to start getting long right in here, and we did that. We suffered a little. Well, we made some money on this one last week, but we really did well this week. And last but not least is the XLF, which is the one that we're trading the small account with. I'm probably gonna be readjusting the positions on that here pretty quick to take on a little bit larger shares, so that now that the volatility's come down, you can increase your position size and have less risk, or have the same risk. Actually, the same risk that you had before is kind of what I'm trying to accomplish. I'm going to have to watch this. I'm expecting this gap to fill up here. So we'd like to see that. I do not like this doji candle right here. But overall, this is performing very well. And we're starting to get some movement here. Nice little volume on a doji. Usually when you see that kind of a volume, maybe, possibly, this is going to continue to go up. The weekly chart is telling us that this is going to go, continue to go up and probably get into this area. Of course, we're going to fill this gap eventually. I don't know when, but hopefully we can do that in the next, next few days. Sooner the better when you're long. So, I hope that you found this video to be entertaining and educational more than anything. It is my goal to help you become a confident, successful trader. And if you will sign up for our free education on our website, tradethebear.com, I'll be happy to share the free training that we have there. Of course, as we get into our strategies more and that, it's going to require a little bit more of a membership to do that. But hopefully you'll see over this year as we track our weekly trading results, we're doing very well. We're probably up around 75–80% in that account right now for the year. And we're making some money. So that's what it's all about. Let's make money together. Again, I am not a CPA. I am not a financial advisor. I am just using these videos as an opportunity to teach people how to read charts and to trade options. So my name is Stacy. Thank you for joining me tonight, and have a good evening.